So with the trading plan, the first thing you want to do while you're creating your trading plan is figure out what's your risk management. And you guys can read the slide if you want. I'm not going to, treat you like kids and actually read the slides to you. But the whole idea of this slide is like your risk management. Know how much you're willing to lose, and it'll go in with the stop loss later on about it. And then your total risk for the day, like, hey, if I'm at, I don't know, 25, $30, $100, whatever it is, what you're willing to lose for the day. Um, know that, and then know what you're going to do when you reach that point. You should have something in place. So that's really the first thing you want to do is, hold on a minute. Someone just sent me a message about where the meeting is or where it's at. Oops, not that one. Hold on a minute. What the hell's going on here? But I'm gonna have to not answer people here because I'm going off track. But yeah, you want to know your risk, and our number one rule, I got it in red, as a trader is capital preservation. And Jimmy covers that a lot when he talks about, if you're in a losing trade and it's going down, and are people going to let it go to zero or not? You might think, I only got, $20 left. I'm just going to let it go to zero. But that $20, that's $20 you could trade later on. So think of that whole capital preservation as that, with you don't want to lose that money, even though it's $20, $10. Yeah, it could come back, but if it goes to zero, then guess what? That's $10 or $20 that you don't have that you could trade later. So, you have to have that capital preservation, which goes in with your risk management of what's per trade, what am I willing to risk on this? Like for me, for example, I'll put my whole account on one trade because I know I'm not going to let it go to zero. I have a certain stop area that when it hits, I get out regardless, how much I make. I don't even look at the PL. I just get out. So for me, my risk management, I know I'm willing to put up my whole account, but I'm not risking my whole account on that. I'm willing, I'm going to get out, and that's where you have to honor your stop loss. Please hold. So that's the whole risk management part of it. Then you have to come up with a strategy for a plan, because if you just blindly go in to trading without a plan, a strategy, so to speak, what are you doing? You just FOMOing in, following candles, or what? So you should have. Is my slide? Am I sharing my screen? Can you guys see it? Okay. Cool. I don't. Cool, Kevin. If you click on my name and hit watch screen, you should be able to see the slides. But you should have a strategy, and more or less it's called setup here on this slide. But it doesn't matter what you use, whether it's the 920, the support resistance, trend lines, there's just a couple here, chart patterns, fib levels, whatever you use, just make sure that it makes sense to you. So for example, I could talk about, hey, the orb strategy, and people are like, okay, what's that? And it's profitable to me, but if you don't understand what that is, don't adopt that strategy to be like, okay, I'm going to do this, because if you don't understand the strategy, obviously you don't want to play that strategy because it'll probably go against you instead of for you. So that's the whole idea here, is try to find a strategy that's going to work best for you, that you understand. Like the support and resistance levels, that's Jimmy's big, that's more or less his bread and butter. The whole basis of this Discord was based on the support and resistance levels originally. But if you don't understand that concept, don't blindly just jump in and play it. Wait till you get some footing under you. Whether you do it with back testing on TradingView, whether you do it with paper trading, you have to do something instead of just blindly jumping in. And that's more or less the second paragraph of it. You have to find something that it's tailored towards how you trade. Like for me, the support and resistance didn't work for me. The 920 didn't work for me. So I found a plan that actually worked for the way I trade, which, I'm in and out, scalping pretty, not super quick, but quick enough, getting in and out. Once you find that strategy, by all means, back test it. And it took me literally, when I was testing with the orb, when I first got introduced to me and tweaking it, I would back test it for a good month. And then I started playing one contract for like another month before I got real comfortable with it and consistent at it and tweaked it to how I want it. And then I started upping my contracts with it, went from 1 to 2 to 3 to 5 and got comfortable with it. But whenever you do your setups, whether it's, like I said, the support resistance, 920, the more confluences you have with that setup, the better opportunity of a winning outcome. And in this slide, the reason why I put it here, because I believe P Daddy always says it, a high conviction trading opportunity. That's, P Daddy's always said, once your confluences or once your strategy presents itself, that's a high conviction play. His 920 crossover, especially with a high volume, you add the high volume 920 crossover, it makes that a little bit better to play towards. But again, each strategy is different, and it's how you take that strategy and make it your own and tailor it towards yourself of whether it's really going to work or not. And you have to back test it, because last night, Rich Witt, I'm not sure if Rich is in here or not, he was using the envelope that T-Bone, he showed the envelope indicator. So Rich looked over it, and after the trading day's done, it's like, oh yeah, this is a no-brainer. He's going through it, and he's doing that one indicator where it shows, your take profit and stop loss on TradingView. I think you could set it up for like $25 or whatever. Well, he had it set up, and he's like, man, it's a winner almost the whole time. It's always a winner. Yeah, some indicators look great after the fact, but while the market's moving, does that indicator repaint? Does it, how does it move? So that's why you have to take time and back test it. So we probably spent 2 or 3 hours last night back testing, and he realized it's not, at least how he was going to play it, it's not as profitable as he expected. I mean, at best on the 1 minute chart, I think we did a couple days. It was I think it was 24 wins and 16 losses. And then on the 2 minute chart, it was like, I think 18 losses and only 14 wins. And on the 3 minute chart, it was even worse. So when I looked at without back testing, it was all wins, because it's stationary and it didn't reprint. But the stream's full. The only thing I'm doing is sharing my it's PowerPoint slides. I mean, if anybody wants to share their screen, they can, but it's just nothing, it's just notes for me to look at whenever I'm talking right now. RF. Yeah, make sure you back test it. And then after you're done back testing it, do it live. And when you're doing it live, you don't even have to play a contract. Just mark down when you would get in, or if, like on TradingView, if you use that take profit and stop loss indicator thingy, just put that where you would take a trade and watch and see how it plays out, and just keep track of it. That way you'll know live, hey, is this going to work or not? Because Rich had a really good strategy. It took emotions 100% out of it. It was, you get in the trade and you basically, if the setup hit, you'd buy in, and then you look for your next setup. And there's times where, the way he had it would be, he may even bought in 2 or 3 candles in a row if it hit his strategy. And he would just have a stop loss and a take profit. And if it hit one or the other, and he was just letting it go. And we kind of tweaked it a little bit for him, but still it needs work. And I told him, make sure before you play this on Monday is, look at it live and do what we're doing now, but do it in a live setting to make sure it'll work for you. Because if you think the indicator is going to work, like I said, without back testing that, I mean, it's just a bad way of doing it. So please, do some back testing. And then what's in red here, it's basically, to sum it up, is have a process in place, as in have a plan in place before you just start trading. Have some kind of strategy out there, and don't just jump in the market and think, hey, I'm going to make millions of dollars. That was my mistake 3 years ago when I first started. I had no plan. I had no clue. I mean, candlesticks, I was like, oh, all I know is green is good, red is bad. So I would FOMO in all the time. I had nothing. I just jumped in the market blindly. So at least have something in place. That way, you'll have something to fall back on and tweak a little bit for you. And then just because you have a great strategy, or maybe like Jimmy's strategy, my strategy, or whatever, don't think, okay, I'm going to use Fib's orb strategy. It's the execution part. The way I execute that strategy is going to be different from you than the next person. So make sure that with that back testing, you have that execution down to where you're consistent, because that's the whole idea of the game, is being consistent. And we always preach base hits. Take those base hits, especially when you're first starting on a strategy. For me, I'm gonna be trading futures here later on today. I took a trade earlier, but I'm using trying T-bones that envelope thing out, and I'm in the process of creating a strategy with it that's going to work for me. And I'm in and I'm going to be out. I'm not looking for a 10, 20, or $30 move. If I'm in a profit $5, I'm going to get out just because I want to keep seeing, okay, is this going to work in my strategy that I'm trying to set up for it? So your execution is very, very important to the strategy. You can have the best strategy out there, but if you have piss poor execution, it's not going to work. And what I mean by that too is hesitation. For example, my orb play, there's no hesitation. You're either going to get in or you get out, because it's really a momentum play. And if you don't get in at the right time without hesitation, you're going to miss the majority of that move. So it's not worth getting in, because then if you get in, the profit targets that I have set up for it, you're really not going to make that much money, on it. So when you do your execution, it's one of those things where it's got to be automatic. It's going to be okay. If it hits your criteria, you make your entrance. If it hits your profit, you get out. If it hits your stop loss, you get out. So please make sure when you're back testing, you're definitely working on your execution part of it. Like I said, don't hesitate. In handling adversity, what that means is, this slide, it basically pertains to your wins and losses. How do you handle having a red day? Do you get down? Do you get upset? Beat yourself up over it, and then all of a sudden the next day you're revenge trading, or even that day, if you're really red, you start revenge trading, and then that's a bad thing. That's what you don't want to do. So you have to be able to have something in place to, whether you be like, okay, if I lose $100 today, I'm done for the trade. I'm going to close my trading view or whatever platform it is. I'm going to trade it, close it down, and I'm done for today. I'm not going to revenge trade, because it will definitely hurt you thinking, okay, I could get this back. So instead of playing those one and two contracts, now you're going to play 5 and 10 contracts. So your losses are even going to be more if you don't have a good, execution of it. So don't, revenge trade, one thing, but have a plan in place. If you lose, to walk away, whether it's pick up a hobby, whether it's basketball or exercise or whatever. Get away from the computer, because the more you're in front of a computer, the more you're going to be just, hey, I got to take a trade. I'm watching the screen. Yeah, I said I'm done for today, but since I'm still sitting here, oh, that looks good, I'm going to go ahead and jump in. So the more you're in front of your computer watching those, the trading platform, the more than likely you're going to jump back in, whether it's a good or bad, trade. And what will happen is too, if say you got a bad loss, you jump in and you get a quick win, you're like, oh, see, all right, yeah, I could do this again. And then you're going to keep at it, and it may even make it worse still then too. So if you take a hard loss, take a step back and realize, all right, what can I do to do this better? and don't trade for the day. And it's also a double-edged sword because overconfidence can hurt you too. So if you do get in there, hey, I'm up $500. Oh yeah, man, I killed it. With only 2 contracts, I made $500. You know what? I'm going in with 5 or 10 contracts. And then guess what's going to happen? Those 5 and 10 contracts are now, instead of up 500, you're probably going to be down 1,000. So overconfidence can also kill you. Not only just being red, having too many wins, you'd be like, oh yeah, dude, this whole week, with 1 contract, I did really great. I'm going to up it to 5 right away instead of upping it to 2. Like I said, take baby steps and be consistent before you start adding more to your contracts, because it'll hurt you. Because if you're not disciplined enough, what'll happen is, especially if you watch your P&L, 1 contract doesn't look bad. Your losses, you're down $2, $3, $5 or whatever. It's not as bad. But then when you get overconfident and throw in 10 contracts or 5, even you up it, that freaking loss that was only like $2 is now like $20, $40, $80, $100, and you're like, holy crap, it hardly moved and I'm down that much. And then you're going to panic and sell and get out, where maybe it's just a slight pullback, and that's part of trading. It doesn't always go up, it doesn't always go down. So you have to have that set in place. That's why I really like and preach, have a stop loss in place with the chart, not with your P&L, because stocks are going to pull back against you. So if you're watching it and your pullback level for your stop loss is, we'll say, under the last, the lowest candle of the day, we'll just say the low day, it's moving up and it's going to pull back a little bit. If you're watching your P&L and you have a ton of contracts, that pullback is going to look like, oh my gosh, I'm down 100, 200, 400, $500. Oh shit, this sucks. I'm getting the hell out. I can't afford to lose that. When you go look at the chart and you're like, well, hell, it's not even close to where I would have stopped out at. So that's why I really like looking at the chart and having that area set for a stop loss. I mean, if it hits it because you upped your contracts that bad, yeah, you're going to lose. I ain't going to lie, you're going to lose that $400 or $500. But you still executed your plan like you're supposed to. And if you make good entries like you're supposed to, then it should go in your favor, but nothing's 100% out there. Same thing for your profit target. Once you up your contracts, you're looking and you're like, oh man, I'm up $400. I'm getting the hell out, and then you look on the screen at the chart and you're like, well, hell, that's not nowhere close to where I'd take my profit target at. So you have to, be like, okay, there's my profit target on the screen. Okay, I'm going to get out there. Once it hits there, I'm getting out. And then hell, if you look, you're up $100, $500, $20, whatever it is on your profit target. That's where you're going to be. So you have to be able to handle and be disciplined, with this adversity and success, because they're both killers. If you're losing bad, you get into that revenge trading. If you win greatly, you're going to jump back in with more contracts. And I'm sure it may have happened to you, but there's people in here that, hey, I'm up $400 or $500, and then next thing you know, at the end of the day, they're hitting the red book because they decided to go back in, whether with, like I said, with more contracts or whatever, and got overconfident and end up losing for the day. That's why Jimmy always preaches, and I'll usually say, hey, if you're green and you're up decent, just quit for today. That's good. It's always good to be green. Golden always said, when it comes to profit, what kind of bank or whatever can you put your money in that you're going to gain, 5%, 10% interest in a day? Nowhere. There's nowhere you're going to gain that much interest in a day. In the stock market, you can literally make that on your account. You can make that on each trade, 5%, 10%, 20%. And when's enough for you for that day? Just remember, hey, if my money was sitting in the bank, it really would be making nothing. But trading, if you have a good plan and that good percentage gains, just stay out of the market. You don't have to get back in. You could stay out, be green for today. Don't get that overconfidence and think, okay, I'm going to jump back in and make double my money, because that's where it hurts too. With people, I was like that gambling. When I was gambling, oh my God, I'd be up and I wouldn't quit, because I'm like, oh hell, I'm up $1,000. I can easily turn this into $10,000, easy. Next thing you know, I'm down $2,000, and it's like, didn't bat an eye. And you can't do that. It's a terrible way to do it, especially with trading. Outline. This is basically an outline of how to, what a plan would be. Your setup, which is basically the reason for getting into trade, whether it's the 920, whether it's, Fibonacci's, hits a certain point, support resistance. This is basically the outline, and you have to have that setup. And that's initially, what is your reason for getting in a trade? And I'll go over and show, like I think I have the Orb OPR on here. I can't remember which one. But you have to have a reason for it. And again, know the setup. Don't just blindly follow somebody else's setup and be like, okay, Fibs is doing it this way, so I'm just going to do it this way. Because if you don't know the little nuances of everything, you won't know exactly when to get in or get out of your trade. So again, backtest, I can't stress that enough. Your entry, what is your criteria for making that entry? So once that setup hits, what's your actual entry? What I mean by that is you're not going to hesitate. Like for me with the orb, if it, 3 minutes, it crosses that candle and does a little bit of pullback and doesn't close, that's my entrance point. I'm jumping in, boom, and I automatically get in. You got to have that entrance point and know it like the back of your hand. I mean, don't hesitate whenever you do your entries. You should have a stop loss, whether it's mental or a hard stop loss. I'm not going to lie, when I'm trading futures, I'm having a hard stop loss because futures can wipe your whole account out if you do it wrong. So when I play futures, I'm going to have a stop loss, and it's probably going to be a $20 or $25 stop loss. I'm only playing one contract at a time right now. So that's going to be my stop loss for me. It's just automatic. I'm going to do a bracket order and have that set. And if you can't mentally do your stop loss, like when I play regular options, I don't have a hard stop loss because I just look at the chart, and like I said earlier, if it hits a certain area, I get out. It hits a certain point, on whichever strategy I'm using, I get out and I just go ahead and sell. So depending on how you can do it, if you can't honor your stop loss mentally, then 100% make a hard stop loss on it. And also have a price target, basically your exit point. How much you wanting to make out of this trade, and have either, like with a bracket order, you can have a bracket order already set. I'm doing the same thing with my features. I'm going to have a price target and I'm going to have a stop loss. It's either going to hit one or the other, and then that's what's going to get me out of the trade. But for options, again, I look at the chart and it's like, okay, I see it. It's hitting my point. I'm getting out. ADP3 asks, do you mark it out with your mental stop loss? No, I don't. When I first get in a trade on Webull, what I do is, as soon as I get in, I hit a limit order sell at 50 cents higher than where I'm at now. So I'll be watching the chart, and if it's nowhere near me getting out, usually when I get in, I just drag that 50 cents up. It's just an initial drag point for me. So, it's 50 cents. I'll drag it to $1 or $2. I'll watch the chart, and as the chart's moving up to my area of getting out, I just drag it down, say, okay, there's where I'm getting out. I'll drag it down to whatever price it's at now. And that's how I do with the stop loss too, is I'll drag that same limit order. Oh no, this is going against me. It's hitting, it's coming close, and I'll start, I'm dragging it down. Okay, it's right there's where I'll get out, and wherever the price is at, I'm out, is how I do it. And I made a couple Webull videos on explaining that. And I did one live video, I think, playing the orb where it was a profit, taking profit on it. And then backtest. Once you come up with this outline and you plot it, whether like your setup's going to be the 920, when the 9 crosses the 20 with high volume, is going to be your setup. And then your actual entry point is going to be, hey, whatever it will be with that 920. It's almost, those will probably be identical for the 920, because once it crosses, that's probably going to be your entrance point. I don't know. I don't play the 920. So, like for me, I'll just go over to the orb play. So, or this is the OPR. So my setup is, when it opens up within yesterday's value area or moves within yesterday's value area, I'm going to look to take a trade. That's my that's my setup of, all right, I'm getting ready to take this trade. My entry point is when it shows strength towards the POC. So for example, when we open up, if we're opening up within that value area, that's my time. Okay, I'm ready for a trade, and the only time my entrance points is if we'll say it's going to be a call. If it's shown strength and it's green candles are printing, I'll jump in. But if it's red candles right away, that's not an entry for me because it's shown weakness, not strength towards that POC. So when it shows strength up towards that POC is when I'm going to jump in. My stop loss would be depending on where it is in the if it's a call, it'll probably be the low point of the value area, and if it's a put that I'm in, it's probably going to be the high value area line. And the price target itself is the POC. So once it hits that POC, I don't care how much money I made, I'm getting out. If the candle's printing and it's a strong candle and it pushes through my POC level, my profit target level, I don't automatically get out right there. What I will do is I will wait for a pullback then because it already hit my profit target. And so I'm good there. And then when it pulls back, then I'll get out. But I'm not going to let it come the whole way back down to my POC. So we'll say a green candle pushes up past my POC and it's up above it 30 cents. And then all of a sudden it starts pulling back. Now it's only above it 25 cents. I'll get out. I'm not worried about, hey, is it going to go up any higher? Is this just a minor pullback? Since it already hit my profit target, I'll just go ahead and get out then. And that's how I more or less set up my plan for a trading plan. And that's really, cut and dry. All I got for setting up a plan. I can explain how I would set up my orb. For the orb setup point right here, I would probably type, and you should write this stuff down. That way you got a hard copy so you can go back and look at it too, and then you can adjust it too. Xandu, show examples. You want me to show you examples of actually using the trade itself to get in and out, or is that what you're talking about, Xandu? On the chart. All right, let me pull up a chart. Yeah, because this is over with here. This. Well, this is futures. I don't want to go to futures right now. I don't want to trade. So right here, I already got the POC set. This is the POC I have set for tomorrow. This purple line is the low. That's the low and high, and this yellow line is the POC of for today, or Friday. I guess that was Friday's POC area. So we'll say this is the opening candle. It pushes up and comes within this POC area. So for me, I'll be like, okay, I'm going to look for a trade once it shows strength up here. It's moving, it's moving, it's moving. Here would be a possible entrance for me. But since it's right at the beginning of it, I'm going to wait. I would like probably for me, once it breaks almost the halfway point between this area and this area, especially since it started outside of it, it's shown strength up. So I won't get in there. So it comes back down here. Okay, nothing. It's pushing up. This candle, I won't get in. This candle here, about halfway, I'd be like, okay, that's showing me strength. I'm going to get in. So I would get in on this candle here. Playing this is my PSC. And then if it closes below here, I'd stop out. So it come here, this candle here, it would have been close, but since it's almost closed right on the line, I'd probably hold and see what's going on. And then it come up. This candle here, it spiked right to that POC. I'd be my exit point. It come up, it hit it, I'm getting out. Because as soon as it hit it, it started pulling back. I would just get out on that candle. Can you? I think Lewis is sharing my screen. If you guys can see Lewis's screen. James asked if I'm recording. Yeah, we are recording, but you can't see my screen. Can you guys see Lewis's screen? I'm not even sure how many people are in here. I'm not sure what the limit is on the screen. If not, if someone else can also share a screen, I'd appreciate it. But if not, I understand. That's the bad thing with Discord is you're limited on how much screen you can see, or people can share your screen. Or Anyone? Can anybody else share screen? No? All right. Appreciate it. I thought I heard someone else. There you go. RF is sharing it now too. If so you guys can look onto his screen. Hopefully you'll be able to see. Appreciate it, Drinker though. Oh, cool. Trade Monkey. Awesome. Thank you. So can you see it now, James? So Plasmic Butter asks if for tips and pointers for support and resistance. Right now, this isn't like talking that specifically, but we can all we have back to basics, the specific support and resistant entries video. You can go ahead and watch, and maybe we can go ahead and just redo that again on a Sunday school. Do another play of support and resistance levels for Sunday school. So here would be another, if I'm playing this OPR, if you guys, it says stream ended. I think there's 3. I'm still sharing, right? It's still, you can see my curve moving and stuff. Yeah, so I'm not sure why it would end there, James. So on this one here, same concept. As it's pushing down, it broke that high value area. So on this candle here, I would get in as it's pushing down. This red candle here, it pushed through the POC, so I would stay in, and it closed below it, so I wouldn't get out. And then this green candle, when it started to form and start pulling up, that's when I would get out on that one. So because it met all my criteria, and I just started playing. Normally it had to open up within the POC or within that value area, then I would play the POC. I just started playing that when it breaks back into that area, that I'm going to go ahead and get into the POC, just because I found about 80 to 85 to 93, I don't know exact percentages, it will retrace back to this POC once it enters this area, the value area. And if it opens up within it, it's 90 to probably 96% chance it's going to come back to that. So that's why I play that OPR play. Let me just hit auto. It's probably the easiest thing to do. So here I probably would not get in back, this end of day this far, because at the time obviously Weeble won't let me play after 3 o'clock, so I wouldn't have played that. But if I did get in, seeing this, its strength up, I probably would have got in on this third or second, one of these 2 candles is when I would have got in, especially with the RV SIs pointing up. Is if I would have got in, like if this happened earlier in the day, I would have got in on one of these 2 candles and would have got out probably on this green candle when it pulled back against me for that. POC is the point of control, and all that is the previous. I play it at the previous day. The purple lines is the highest value area that happened in that day. The volume, the highest volume that was traded, is within these purple lines, and then the POC is basically where the most volume of that day was traded. And I just, from back testing, from what I found, is if it opens up within that area, a lot of times it'll retrace back to that POC area. And then orb too, so we can talk about the orb. So if I was making a trading plan for the orb, I don't have it up on the, so my setup would be, this first candle, I'd like to see strength to one side or the other. Obviously, you see here, we're on a 3-minute chart. That first candle, it did push up, but then pull back. So I'd be like hesitant before I would jump in this one here. This second candle pulls back, so my entry criteria would be, if it breaks it and keeps pushing, I'm probably going to jump in real quick, but I'm waiting for a pullback. So this probably, if I had to say pulled back, I'd say it probably pulled back to the lower than the 236. That's probably almost a 618 level. So in between the 382 and the 618 is that pullback. And then how I play it, as long as it doesn't close down here and it starts pushing back up, that's when I'll make my entry. When it pushes back up, especially once it pushes past this like 236 area, it'll push up. That's when I'll make my entry on that. My price target's this 786 level. So my stop loss would be if it closes below this 382. So if you're going by that one slide that said, okay, the setup was, I'd like to see, strong push on this candle here. My entry is if the second candle pulls back and doesn't close below, the 382 or 236 and starts pushing back to, the upside, that'll be an entry, and vice versa if this is going to be a put. That's my entry. My stop loss is going to be if it closes below the 382. My profit target exit is once it hits this 786 line. Again, it blows past that 786 line, so I'd stay in. It pushes up. As soon as it starts pulling back, I'm getting out. So somewhere in this upper quarter of this candle, is my exit strategy. I'm out. I would be getting out on that. So that's basically, real quick. I just, doing the orb with how do I make a plan up following that criteria. Your setup, I talk through the setup, I talk through what my entrance was, I talk through what the take profit level was and the stop loss was. And that's all you got to do with creating a plan, a strategy, and then back test it. Like I said, I back tested this and the orb, at least a month before I started playing even one contract with each of those. And then, probably another month is playing that one contract, and it's like, okay, that's good. And once you become consistent, you're like, yeah, I'm definitely going from one contract to whichever. If you're gonna feel confident and consistent, don't go from 1 to 5 right away. I'd probably go from 1 to 2 or 1 to 3. Make sure, okay, yeah, you're still you're still consistent with it, and then go to 5. Sometimes I'll play 10 on the orb play. I'm that confident. Except my win percentage with the orb since the end of July is it's 100% really. I haven't lost on the orb because I don't take it every day either. And like I said, if I'm in this trade and it starts pulling back against me, I'm not letting it turn green. I'm getting the hell out right away. Yeah, my stop loss is at 382 level, but if I'm green and it starts pulling back, I'm getting out. I'll get out with $1. I'll get out with 70 cents, 75 cents. It's just the way I play. If I'm green and it starts pulling back, because I've been burnt so many times where it pulls the whole way back down here that I used to let it go and it'll come back up. It'll come back up. No more. If I'm green and it starts pulling back, I'm getting out. Yeah, Charlie. What I'll do is I'll pull the fib on that first candle. Let me get the crosshairs back. It's easier to do fibs. So on this first candle, I ignore the wick part because I'm not getting, my entry isn't up here. My entry is technically the break of that candle. So I'd go by the bottom to the body of the candle. And then we'll say it didn't pull back. We'll just say, hey, this didn't pull back here. It just come in and it started pushing straight up. I would jump in, because it still met my criteria. It broke above it and it's pushing up. And then all of a sudden it starts pulling back. I'd just get out because I'd be green and I'd get out. Yeah, that's my features, Carl. I got the MES for my features, which after I'm done with this, I'll probably watch it and it'll be, all night. And I'm still working on a feature strategy because the orb is an opening. It's a momentum play. It plays right off of the opening, and really futures. Yeah, 6:00 p.m. is the opening, but it's nothing like 9:30 in the morning when market opens. So I'm still working on a strategy to play that in the evening. The OPR play where where is my lines? I don't even have them on here, do I? There they are. So I can't even do the OPR on futures because there's really, you're plotting the prior day, and with futures there really is no prior day. It's because it's like stops trading for an hour and then it keeps trading, so it's like a non-stop thing. So that's why I'm not using these techniques or strategies on futures right now. Now I'll play the Genesis plays on futures, and basically, what the Genesis play is, if it creates a higher high, this is a higher low, this is a lower high, this is about this here would be the lower low, this is a lower high, so then I would draw, people call them flags, people call them trend reversals or whatever you want to call, but for basically the Genesis is it created a lower low, a lower high. Once it breaks here, the proper way of doing it is you should wait until it closes and then, get in. I do the Barney Fife. So as soon as it breaks and it's red and I'm looking for a put, I'm jumping in right away. And then my exit strategy is down here at the start of it. So my entrance, hold on 1 minute, somebody's staticking. Don't know who it is. But so my trade plan for the I'm drawing a blank already. Holy crap, I just said what it was. Genesis play would be I'm looking for a higher high, higher low, or lower low, more or less like I told you. I wanted a lower low and a lower high. I draw the line. Once it breaks this line, that's my entry. So the setup was, lower low, lower high, and draw the line. My entry is once it breaks that line, I'm getting in. My stop loss is going to be usually it's above the previous candle, but if this candle was higher, it would just be right above that would be the stop loss. My take profit is the actual genesis of it. So, drawing the line straight across, that's your take profit. And as you can see, it would come down, on this candle here, it hit that area. And then that little wick, once it started wicking back up, is when I would have got out of that. And so that's basically a trading plan for the Genesis. I just, I've had it created already, but if you're creating a plan, that's basically how you do it. You have a certain setup, what's your setup, what's your entrance criteria, what's your stop loss criteria, what's your take profit criteria, and then, obviously back tested, and we back tested that, pretty extensively. Again, here's a lower low, a lower high. So right there's a setup. Coming down, that's a lower low, that's a lower high, that's the setup. Draw the line. If it breaks it, get in. So draw that line. Yeah, that broke it, but this one here, I definitely would have got in on this candle and wrote it down to wherever the Genesis is. So this candle here, it pushed down, started sucking back up, and that's what exit point. And then I do the fibs, but which the fibs, it's too in detail to explain the setups because there's so many different setups you could play off the fibs and exit strategies and entrance. I'm not even going to go into that here because it'd be too confusing to people. But yeah, that's it. So questions, comments, concerns, or anything on any BXY on Sundays to play the futures? Is it a future one, I guess? Do you use risk reward ratio in the plan, like 2-to-1? No, Trade Monkey. I don't have any percentages. I just, like for the Genesis, it's if it hits this area, you get out. If it hits this area, you get out. The OPR or the orb, if it hits that 382 or 786 area, that's my get out point or profit target. And then for the POC, if it hits the POC, get out. So if it broke in here and I made my entry here. If it dropped back below this line is my stop loss. If it hits the line is my target profit. So I don't do like the risk reward stuff. I just do if it hits a certain area on the chart. And that's why I said there's sometimes I'll make $20, sometimes I'll make $80, $120. And then, if it comes down here, sometimes I'll lose $40. Sometimes I'll lose $80 or $100. I don't have a looking at my profit P&L, so I don't know how much I lose right there until it hits that area of the chart. Because I found for me, if I'm sitting there watching my P&L, I'll get out a lot earlier. I'll be like, ooh, here, say I got in right here and it's pushing up, and I'm like, all right, I'm up $80 already. Oh, that's good enough. I'm getting the hell out. When I should have let it, just like my plan is, just go to the price target and vice versa. Yeah, Hebs. The thing with the orb play in the morning is volatility is so high, so those little movements, you actually get pretty decent profit on them because the volatility is so high in the mornings, which makes it nice. And it goes against you too. That's why I get out so quick on the orb. If I'm green, I won't let it come back red against me because it works in both ways. As it's moving up, the contracts are moving pretty decent because of the volatility, and vice versa. If it breaks down below, that's why if you're in it, it's a momentum play. It's getting in and getting out. It's not, hey, I'm going to hold and see if it's going to keep going up like this. Is it going to keep running all day? I'm not waiting for that, because in the morning, that volatility is so bad that whenever this pulls back against you, it's not worth it. It's just, I'd rather get out with a 70-cent freaking profit instead of, having it pull against me. And next thing I know, I'm down $10, $20, and then I have to get out. So it's better to get out in profit than not. Bobby, you're crazy, dude. Any other questions or comments or anything? No, Webull doesn't have trailing stop losses. So if they did, I probably would use trailing stop loss. I know Moo, when I was on that, it used trailing stop losses. I liked it, but at the same time, I didn't, because the bad thing with stop losses is, if it's just a wick, those stop hunts or whatever, they'll wick back to get you. That's why I just like a certain area, and I'll play at the close of the candle. If it hits this area, usually I get out. And I like to say I have stop losses for, here, but if I'm green and it starts pulling back against me, I'm getting out before it even crosses this line. That's my stop loss. Say I just initially get in a trade, and I'm not green right away, but as soon as I got in, it started pulling back. I'll wait until it breaks this line then for my stop loss, because I'm going to give it room to actually breathe and play out. It could just be a pullback. But if I'm actually green and it starts coming back, I get out. It's like I am out. Which indicator are you talking about? No, Carl, I actually do. For example, let me do a demo trade so I could show you. Let's say $25. So I have no idea if it's going to move up or not. I just want to do let's see, it's a higher high, higher low, so it might pull up. I know the RVSI is down. It don't matter. I just want to show you. So I'm going to buy in here, and what it'll do is it'll have a take profit level. So on Webull, as soon as I buy in like this, I'll set a sell limit that's higher than my actual buy-in. So now I'm just looking at the chart here to see where I'd get in and out. And what I will do is I'll just drag this up or down to wherever, my profit. Say on the chart, I was playing a Genesis play, so I'd be like, okay, right here. But on Webull, you can't do that. So my dragging point's going to be up here. I'm watching TradingView, and I'm like, okay, is it going to hit my profit or not? And we'll just say, okay, right there, it hit my profit target. So I'll drag this down on Webull, more or less to sell at that point, and then it would sell and get me out of it. And vice versa, same with the stop loss. We'll say it was coming back against me, then I'll go to Webull and I'll drag that down to wherever the price is at that specific time, and then I get out. Um, this indicator, this is the MA. This is by VHawk. And it's basically yeah, exactly. Sometimes when I go, if I'm making an entry, I'm thinking, okay, everything's good. I get in, but all of a sudden it'll pull back against me and I'm red. And that's when I basically my stop loss comes in play. So for here, like I said, if I entered up here expecting it to go up and then all of a sudden, instead of pushing up green, it actually pushed down, I'm going to stay in it, stay in it, stay in it. It could wick below here, pull back up. I'm still in it. But if it pulled back below here and closed, I'd get out. And then, I mean, if it kept pushing down hard, I'm not going to wait until it closes. Obviously, I'm going to get out and be like, oh shit, it's going to keep pushing down. I'm not stupid, but I am kind of crazy a little bit. But yeah, I live by the philosophy, if I'm green, I'm getting out green, because I used to hold and hope. I'd be green and hey, I want a $500 profit. I could be up $100. I'm wanting $100. The next thing I know, I'm down $200. Oh, it'll come back up. I'll just keep averaging down and blah, blah, blah. And I lost a shitload of money. And then when Jimmy had that talk out one day, it just resonated me, because I was green, and to put it blunt, I'm going to cuss here. He said, if you're green and you let it turn red, you're a fucking idiot. And I was like, you know what? I'm not an idiot like that. I'm not going to do that again. And I don't. If I'm green and it comes back, and ever since then, I became more of a consistent and profitable trader. Which indicator shows your higher lows? Okay. The higher highs is it's called Higher High, Higher Low by Lonesome. I'll just copy it and put it in the screen here. There's that one. There's a one, too. This is a good. So this indicator here, it automatically plots your fib levels for you on that opening candle. And I'll link it here in a minute too. Why isn't it saying my actual fib levels here? It should. For some reason, it's not showing the actual prices. Huh. Well, I'm going to have to mess around and see why it's not shown. Maybe it's because it's, after the fact. But what this candle does is, I'll just replay it so you can see what happens. So when that populates, as this next candle's going, it's going to plot these fib lines for you automatically. So when if it pulls back to this area and it closes, you can get out. It pulls back and starts pushing up, you get in. Again, on TradingView, that candle it was like a two-phase candle. It went down and went up. But in real life, it would have been, because it's a 3-minute candle, it would have pushed down. And then it would started been pushing up. And as it was pushing up, that'd be like, okay, across that 236, I'm getting in. If it would have pushed back down, I would have got out. It kept going, hit my first profit target. So if it starts pulling back, I'm real comfortable with getting out here. Hit my second profit target. Oh yeah, I'm good now. And then it kept pushing up, push up. So that indicator's really, really, and let me find it too. Because you don't have to draw the fibs or anything. It'll automatically plot it if you're playing the orb. Right. And actually, I think everybody in here is a member, so I can actually We have that in the custom code section too. I'll just, because it's for TOS also. If people are on TOS, that indicators for TOS, VHawks made it, and like I said, we were working for a while with it, trying to get it. And then I almost, he had a setup for it, and I was like, man, it was cool, but it didn't work out the way that I would play it. And then he tweaked it perfect, man. I mean, to me, I love that indicator. After you get in the orb, do you continue watching it on a 3-minute? I'll watch the orb on a 3-minute chart. Because I don't think the switch after I'm in. I guess I should or could, because you're just playing the fib points at that area. So technically, I guess you can switch over to the 3-minute and then keep watching it, or the 1-minute and watching it there. But it never dawned on me to switch over while I'm in that trade, so I never did it before. But yeah, I really love that indicator, man. It's helped me out. I mean, I can look at it and see and be like, okay, that is, pulling back. It's probably, like I said, even before I drew the fibs, I was like, that's probably almost, it definitely wasn't the 236 area. It was almost the 618 area, when it pulled back, which I guess it's the 5 area. And then the price target, I can definitely look and be like, oh yeah, that hit my target. And I do have price targets, but like I said, it don't matter. If I get in, I'm green, it starts pulling back, I get out. Even though it didn't hit my price target, I'll get out because I can get in another day. I'm green only $5 instead of $30 or $50. I'll get in again somewhere else. So it's best to get out green instead of wait. Okay, it's pulling back. I was up $30. Now I'm only up $20. Now I'm only up $15. Now I'm only up $10. Now I'm negative. Now I'm okay, is it going to come back up? Oh, yeah, it's coming back up. It went back down. Oh, shit, should I get out? Man, I can't stress enough, guys. If you're green, and like I said, you can always get back in another trade. There's going to be another setup. Granted, not the orb setup, but that's why I have different strategies. The orb is first thing in the morning. I'm either going to play it or not. It's either going to hit or not. If not, okay, I disregard the orb. I don't even think about the orb the rest of the day. Now I'm concentrating on another strategy. That's why it's good to have multiple strategies that you're good at and consistent with, so you can play them. Yeah, I can't stress enough, guys. If you're green, don't hit that home run, man. Hit that base hit. Get in another trade. You're green another $20. Guess what? Now you're up $40. Just hit those base hits. And by the end of the week, next thing you know, you're going to be up $500, $800. Whatever it is. I mean, obviously, like I said, if it's a strong push here, I'm not getting out. It's pushing up. It could have pulled back a little bit, but pull back a little bit. Okay, but $10, hell yeah, dude. Dude, like I said, I've taken a 72-cent profit before. I think it was. Hell, I think I even took a 38%, or 38-cent profit. I'm not greedy, and you can't be. Hey, I'm green. I'm getting out. I'm green, and that's why. Like I don't want to brag about it. That's why I have 100% on the orb play, because I'm in, pulls back, I'm getting hell out. Yep, that's a win for me, because guess what? I'm green on that trade. So it's all on your mental ability, and proudest $10. Heck yeah, Mr. P. And like I said, that adds up. If you keep hitting that $10, I mean, it's going to add up down the road. But that's all I got, guys. You guys got anything to, like I said, we could talk about anything else? I'm not big in support and resistance, but I understand the concept of it. But that's a whole going down those roads. That's a whole different atmosphere, because that can be a whole